Welcome back to the deep dive. Um, Today we are looking at the weekly crypto outlook from Vantage Plus, which just dropped this Monday, March 2nd, 2026. And honestly, it feels like the market is trying to gaslight us a little bit. We saw that attempted rally last week and then, well, nothing.
Yeah, it just evaporated. The report actually describes it as ending on a decidedly bearish note. The risk sentiment, basically how brave investors are feeling right now, is just fading fast.
See, this is the part that confuses me. Usually when the world gets chaotic, that whole Bitcoin is digital gold narrative kicks in. We have serious geopolitical instability right now, specifically with the recent attacks on Iran that they mentioned in the analysis. You would think people would be flocking to a safe haven.
Right. That is the logical assumption, but that's the core tension this week. Despite all the geopolitical heat, Bitcoin just isn't acting as a hedge. It is failing to be that safe haven.
So it's tracking right alongside investor risk appetite instead.
Exactly. When investors get nervous about the general economy, they aren't buying Bitcoin, they are selling it.
So if fear isn't pumping the price up, what exactly is dragging it down? I mean, is it just gravity or is there a specific culprit here?
Well, it's a mix of sticky inflation and big tech. The report flags U.S. producer prices rising by 0.8% month on month. That keeps the inflation scares very much alive. But the really fascinating part is the correlation with NVIDIA.
Wait, the chip maker. What do they have to do with this?
Well, NVIDIA posted positive earnings, which usually sets off a massive party across the board, but the stock price actually fell. So that negative sentiment in the tech sector is dragging the crypto market down right with it.
Wow, so it's a harsh reminder that right now crypto is behaving like a high-risk tech stock, not an uncorrelated asset.
Precisely. And while Bitcoin fell, the altcoins took a much harder hit, dropping more than 6%.
Right, so the macro environment is pretty hostile. You would hope the charts offer a hiding spot, but when you look at the technicals in this report, the damage is, well, it's pretty visible.
It really is. Let's look at Bitcoin. It is sliding, currently trading at $63,620. But the report points to a specific historical timeline here, a pattern they think might override the day-to-day noise.
A timeline. What does that mean for the short term?
They call it the cycle theory. The historical pattern is essentially 3 years of a bull run followed by a 1-year decline. If that holds true for this cycle, the analysis suggests we might just be in a waiting game.
Wait, so we might not see the substantial price rises until when?
Probably not until October of this year, October 2026.
October. That is a long time to wait if you are checking your portfolio every 10 minutes.
It is a serious test of patience. And right now, the danger zone is very clear. We are eyeing the psychological support of $60,000. If we get a clear break below that $60 K mark, the report warns it could trigger a much further fall.
And if Bitcoin is waiting for October, what does that mean for the rest of the market? Because usually when the king sneezes, everyone else catches a cold.
In this case, it's more like pneumonia. The altcoins are showing serious vulnerability. Take Ethereum, for instance. It is trading at $1,860.
Oh, wow. So it completely lost its footing on that rising trend line at $2,000.
Yeah, it broke right through it. To get any momentum back, it needs to break above the 50 moving average, which is at $2,445. If it doesn't, the analysis sees a likely retest of $1,500.
Yikes. Okay, what about the others? Ripple and Solana.
It is a similar story of fading momentum. Ripple is trading at 1.2786.
So under $1.30.
Right, and it had a breakout to the downside on the daily chart. It needs to reclaim the $1.50 level to shift positive. Currently, there is just no major support zone in sight.
It's basically in free fall until it hits a floor, but Solana is maybe the most alarming chart in the deck, right?
It is. They describe its general trend as extremely weak. It is trading at $78.09, but the technical support is sitting right at $75.
That is a very thin margin of error.
Exactly. And the report warns that if that $75 level fades, we could see a breakdown all the way to $25.
$25. That wipes out nearly 2/3 of the value.
It highlights just how fragile the altcoin market is right now. When the safe haven narrative fails for Bitcoin, the floor just falls out from under the rest of the market.
So, to recap, we have a market under pressure from inflation and tech stocks, and a technical setup that suggests we might be waiting until Q4 for the next big rotation.
Precisely.
Yeah.
The altcoins are especially vulnerable right now as those critical floors are being tested.
It sounds like the strategy for right now might just be patience. But I want to leave you with a thought based on what we just went over. If the whole safe haven narrative is failing right now in the face of very real global conflict, is the market simply in a holding pattern for that October cycle rotation, or has the fundamental identity of crypto actually changed? Something to think about while you watch those charts. Thanks for joining this deep dive into the Vantage Plus outlook. We will catch you next time.